Welcome to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec on Monday, the 16th of March. Just an utterly incredible set of events we've seen over the weekend. The central banks have really gone ahead and tried to get a hold on this whole coronavirus situation by engaging in a series of coordinated measures. But the news that the Federal Reserve has cut rates to pretty much 0 to 0.25% on the Fed funds range is 150 basis points off the rate in the last couple of weeks, and they're also going to engage in further quantitative easing of 700 billion of assets, and it's just an incredible move to try and stem the flow on certainly markets, but also the whole coordinated measures from central banks in an attempt to improve the funding rates, the overnight funding rates, which have caused swap prices to soar higher, and subsequently trying to improve the flow of dollars back into the system, which is a key reason why funding rates are so clogged up at the moment. So what we have seen is that markets have responded, but not really all that positively. I mean, the dollar slightly weakened against euro and sterling. The big move is still that there's been basically a panic actually out of risk assets once more. You can see here the yen is much stronger again, almost 2% more, climbing lower on dollar yen. Look at this gold price, 4% now on gold. It was actually up early today in an initial move higher, but just the gold price just continues to find sellers whenever they find them. Look at silver, 14%. Just incredible moves, and you can see here through equity markets, 6% lower on FTSE, 7% on FTSE, 8.5% on DAX. S&P 500 futures hit limit down. So the moves that we've seen is not actually helped to stem the flow of selling. It's actually exacerbated it incredibly. So you've got that, and you're coming in with the oil price, which has come back lower again. The WTI is back below 30. Yeah, it's just all over the place. It's just all around pretty negative stuff. VIX volatility not really moving because of the limit down, I think, on S&P, but yeah, just incredible. You can see here through treasury yields that the treasury yields, they're off their lows certainly, but the 10-year treasury yield was sort of 30 basis points lower. It's just maybe 15 or so just at the moment, but yeah, just still really strong moves to the downside, and just across the board there's mass selling pressure, and just the markets are panicking because it seems as though that the central banks have basically shot their bolt now, and what have they got left? I mean, the market is still not really, has no clarity whatsoever in terms of what coronavirus could do to medium-term asset prices, and how the pricing of that is. So the uncertainty means just sell now and ask questions later, and you can see that through the market moves today. Just stunning. We've got the Fed in blackout period until Wednesday. I say Wednesday. There is a Fed meeting this week, but incredible that they've acted so significantly just a handful of days before that meeting. You've got, let's have a look at data points today very quickly. We've got the Chinese data. We've started to get some indication of how February went in China. Look at that. Industrial production 13% down, retail sales 20% down, investment 25% down. Just stunning moves. Stunning just collapse in economic activity there that you've got. Now, looking out to this afternoon, you've got the US data for the New York Fed manufacturing expected to come in at 4. Well, let's have a look at the fact that we've seen that the New York Fed manufacturing, this is purple line here. I mean, if that doesn't go below 0, I'll be very surprised actually and the data is for March, so yeah, I can't imagine that's going to be especially positive today. But yeah, just incredible moves. Okay, that takes me on to my chart of the day, which let's chart of the day, which is Euro Swissy. It looked on Friday as a Euro Swissy was attempting some sort of a recovery, and we had that reaction back towards this pivot line around just that 106 area. That old support through February has become resistance in recent days. Failing at that level, again failing there or thereabouts at that level today, and just moving back again. It doesn't look as though this market is ready to yet recover. I mentioned in the daily report that you do have this sort of positive divergence, and that is sort of loosely termed, I think, given the fact that the MACD lines are now falling back, as are stochastics. So this is over a number of weeks and arguably even into months, maybe you're going to get this positive divergence forming, if it isn't even a positive divergence. But to be honest, I think the selling pressure is still there, and it's retesting the 105.40 reaction low that we had from last Monday, which held actually into the close basically on Friday. But again, we're sort of edging lower towards a test of that today. And whether you see a sort of a breakdown or not would be the next move back towards 105 figure. But you're already, sorry, let's just reset that, already at record multi-year lows, dating back to, well, 2015 now. So it's yeah, it doesn't look great for Euro Swissy to continue to fall away, and you then begin to answer questions about what the bank of what the Swiss National Bank is going to do about that. They're not going to be especially happy about that anyway. So yeah, some sorry about the downbeat attitude today. It just doesn't look as though there's any real considering the reaction markets have had to this massive Fed approach. It doesn't look great, does it? So what we've seen is that just massive selling pressure continues. Anyway, with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars. Thank you.